Hi everyone, you are finally on the last chapter for the school year here. We're starting chapter 13 and we're only going to get a little bit into it and you are done. So this chapter is talking about our tax returns, okay? So this first section is talking about giving you a lot of information. So hang on, let's understand what we're talking about and then we'll get into some problems. So here, let's start at the beginning here, okay? Every resident in the United States has to file a federal income tax return, okay? If they make over a certain minimum amount, okay? And so the government decides what that level is. But everyone has to, above that level, put in apply for their federal income tax each year, okay? The government requires the employer to withhold income tax from each of their employer's paycheck and send it to the federal government. And the federal government takes out the same standard amount. And when we get to the end of the year and that, you do a federal income tax and you realize whether you've paid too much into the government or not enough. And so the federal government will give back any extra money that went over the designated amount. And if there's not enough, you have to pay the government in. This tax return is due by April 15th. And it has to be sent into the Internal Revenue Service. They can audit your information if they think that it's not accurate. And so they check that over. And if you cannot get it in by April 15th, you have to apply for an extension, okay, to get it in at a later date. If you do not do this, you're going to be having penalties along with interest charges that will accumulate until that gets turned in. So you need to make sure that you get it in at the correct time. Okay, so how does the federal government know how much they should be taking out? Well, we have this form, the W-2, okay? And the W-2 is a wage and tax statement filled and it's filed with the IRS, and it identifies who the employee is, who's the employer, the total wages the person will be making, how much withholdings from the federal tax that this person wants taken out. It will also include the Social Security tax amount, the Medicare tax, state income tax, and the local income tax. This will all be set in this W-2 form, okay? This W-2 form will be sent to you by January 31st, and this purpose is so that you can file your federal income tax, okay? Multiple copies are given to the government, to the employee, and to you. And when you send in your income tax return, you have to attach a copy of this W-2 form. Okay, so let's talk about our different ways to file an income tax. There are 3 different forms here, okay? The first one is the easy one, that is a starting person in the workforce is more likely what you will file, okay, being younger. You're going to do the 1040 easy form, okay? It's the simplest form. The other 2 forms are going to require extra schedules or worksheets that will help you through finding out how much of certain things you can deduct or your taxable income. So these forms, number 2 and number 3, take a little extra work. So the second form is called our Form 1048, and then the third one is our Form 1040. Okay, and the 1040 is the most complex one. So if you have a lot of deductions that you need to take, corporations and different things, they will be using the 1040. Now, what determines which one to use? Well, it comes down to your income level, okay? The number of dependents you're going to claim, your income, and the amount of deductibles, okay? And so that will tell you which form that you can use. Okay, so let's get into more of this here. And we've got some information here, okay? We need to figure out what is total income. And our book's definition is the income of, it includes your wages, commission, tips, dividends, interest, profits from business, or the sale of real estate. That all can be added up into your total income. Okay, you can also have adjustments to your income, and that would be certain tax-free payments. Okay, this is directly subtracted straight from your total income. Okay, this reduces your taxable income amount. Then we get what is your adjusted gross income, and that's the difference between these two. Okay, taxable income is that adjusted gross income minus any allowances or deductions and exemptions. Okay, so extra stuff is taken off from that amount, and that's what we're going to be, your taxes are based off from. Here below in my notes here is the stuff from page 487, and I'm going to show it to you in your textbook here because this is your lifeline through this lesson. Okay, this basically is going to walk you through the steps to help you find out answers to your homework assignment. Okay, this basically lists the steps of how to find a person's taxable income. So first thing that you need to work with is actually finding your income. So step 1 says list all the income amounts and add them up. That's your total income. Then the second thing you're going to do is list all your adjustments to the income, add them up and get that total. Then the third step is to subtract that adjustment from the total income. Okay, and that's your adjusted gross income. So it basically walks you through step by step. You just need to know which ones are adjustments, which one's your total income. Okay, once you figure out your adjusted gross income, then you get into these deductions. So now you have to find your deductions. So that is going to be standard deductions. Okay, exemptions, we're going to talk about that here in a little bit, but that will be your children, any dependents that you might have. Okay, so you're going to add these up, subtract it from your adjusted gross income, and that will give you your taxable income. So this section right here from calculation of taxable income to the bottom of your page is going to be very important, and that's on page 487. The other thing I want to draw attention to is here at the top of this page. Here it lists what all your total income is. Okay, so total income is your wage, your commissions, tips, dividends, interest, profits, and real estate. So this tells you right here what we're going to include in total income. And then down here, it tells us what is our adjustments. So I highlighted those in my book so that I could find them quickly. But these are 2 important things that you need to know, because we're going to do a little bit of practice here. You need to be able to recognize what is total income, and so that you know how to begin your problem. So I've got a list here, okay? So I've got wages, interest income, corporate stock dividends, insurance settlement. One of these things is not going to be added up to get your total income. Which one do you think it is? Okay, it's this bottom one right here, the insurance settlement. Okay, that is not adding to your income. This was something above and beyond that you got. So this would not be, if you had a list of money that you had to add up, this would not be included in your total income. Okay, how about this one here? I've got commissions, bonus, gifts, interest income, municipal bonds, and stock dividends. Okay, there's 2 of them that do not belong in this list for total income. Which one do you think they are? Which ones? Is it commissions, bonuses, gifts, interest income, municipal bonds, or stock dividends? Okay, so the first one here that does not belong is gifts. Okay, that is not in your taxable income. The other one here is municipal bonds. This is part of your adjustments, okay? So the rest of them here, the commissions, bonuses, interest income, and stock dividends, that you would add up together to get your total interest. Okay, let's try one more here, okay? We have wages, tips, child support, benevolent gifts from your church. Okay, which one? There are 2 of them in here. Okay, it would be the last 2, your child support and benevolent gifts from your church. Okay, so these we'd have to be able to recognize and work with. So that's why your page 487 is so important in the top. That will be what helps you through these things. Okay, So let's go ahead and let's figure out here, okay? How do I find my adjusted gross income? So basically, I had this list of stuff here, okay? And I had to determine which stuff was my income and which stuff was my adjustments that I needed to take off. And looking through the list, I realized that wages and interest were my income. And these things over here, my traditional IRA, moving expenses for the taxpayer's job, that can be part of your adjustments, and your student loan interest. These are all adjustments. So what I'm going to go ahead and do is add up these totals. So my total wage here was $33,324. These adjustments added up to $4,233. Now I'm going to subtract them. And this gives me my adjusted gross income. Okay, so we're going to talk about here. Before we get to some examples, let's talk about some definitions here, okay? And so I am looking here at these three definitions down here. We have what is called the IRA distribution. And that is income paid to the taxpayer from a retirement plan, okay? And it's part of the total income, the IRA distribution. Now, the contribution part of it is money that's set aside until retirement. And that is not taxed until it's actually withdrawn. So this is part of your adjustments, okay? And so we've got to be able to tell the difference between the two. Now, the other thing we're going to talk about is what's called filing status, okay? When you go ahead and put in and do your income tax return, you're going to have to either name yourself as being a single. Are you the head of the household? Are you married, filed jointly? Or are you married, filing separately? Or are you a widow or a widowee? Okay, and have dependents. These are your choices that when you do your income tax return that you need to choose. And the thing is because you will get exemptions for this, okay? And so we have what is a standard deduction, okay? A standard deduction is the amount of income that is tax-free. And it is based upon your filing status. So that's why you had to choose out of those 5 choices before which one you were. Because on page 489 of your textbook here is a little tiny chart. It's table 13.1. And this gives you the standard deduction for which one you are here. Okay, are you single? You would get $4,750 deduction for that. Are you the head of the household? You'd get $7,000. If you're married filing jointly, you'd get $9,500. And if you're married filing separately, you would be $4,750. Okay, so this is a table we'll have to use to help us through our assignment too. Okay, the other thing that we can take money off from our taxable income is with dependents, okay? So basically the government gives a certain amount of money to each person that they can take off their taxable income. And it's a standard, straightforward amount. Our textbook is going to use $3,050 per person, okay? And that is what our book has determined for our problems we're going to use. So we're going to write that in here. Our book is going to use $3,050 for that dollar amount per person, okay? And we'll write per person. Okay. Now, this will allow us to subtract it, and it basically makes it easier because it's a standard amount for it. Okay, and it's to simplify it. Okay, I did write that down there farther again, so we really can notice. Remember, our book is using $3,050, but we're basically doing it to take away it's tax-free income. They do it and we do not have to justify it. There are other deductions that we can make, but we have to have paperwork for it. The standard deductions, we do not have to claim anything. Okay, so let's do a little bit of practice here. and before we actually get into our big review things. So I've got two problems here. And to do this, we are going to look on our textbook at page 489. And we're going to also look at the dollar amount that is set up per person for deductions here. So we have a married, we're filing jointly with two dependent kids. Okay, so we're going to look at the chart here on 489, and if we're married filing jointly, we have a deduction of $9,500. Where did I get that? That total came from table 13.1. Now I need the standard deduction, and that standard deduction is the amount for our per person. So if I am married, that means two people and two kids, I'm going to take 4,000 times my 3,050. I will multiply that total together and add it, and that total would be my final answer. Okay, how about this one? We're singled with standard deduction. Okay, single, looking at the chart, it's on 13.1, we find out it's 4,750. Plus to that, we're going to add the standard deduction of 3,050 per person. Add that up together, and that's our final answer. Okay, so we're going to take everything we learned, and we're going to look at this family here and work our way through this. Okay, so let me get the paperwork here. Our book kind of separated it, but it made more sense to do it in one step here. So let's go ahead and look at our family here, okay? We've got Mr. Goldberg, okay? Mr. Goldberg received money from the following sources during the tax year, okay? Determine his total income for the year. And so they give us all this information: wages, interest of corporate bonds, interest of municipal bonds, stock dividends, and gifts. Okay, right now turn in your book to page 487, because for these problems we are going to work our way down that list. And right now we're working on problems 1, 2, and 3 basically. Okay, so we're determining right now step 1, which is our total income. Now we have to decide what should be added in our total income. Okay, so our taxable total income is going to be wages, our dividends, interest on corporate bonds. Okay, and now we're going to add their totals up. So we need to add the wages, our corporate bonds interest, and remember our tax dividends. This municipal bonds is part of our adjustments, and gifts do not count. Okay, so those 3 things, we're going to add it up, and this is our taxable income. Then we have example number 2, and it says, okay, now they want us to attribute for our adjustments. And so now we're moving on to step 3. We did step 1 and 2 up here. Now we're looking at step 3. And step 3 says, okay, add up our adjustments. So we have our IRA contribution and the penalty for early withdrawal. Those are all adjustments that I can do. So add them up and I get the total of $2,450. Now I'm going to go ahead and take my income that I have up here that we found in example 1 and subtract my adjustments. Okay, and so basically I just completed between these 2 problems step 1, 2, and 3 of this checklist that we need to work with. Okay, now we're going to go on and we're going to continue on through that checklist to example number 3 down here, okay? And example number 3 says, find Mr. Goldberg's deductions from his adjusted gross income. He is married, filing jointly, and has 3 kids. Okay, so the very first thing is we're going to find the standard deductions from table 13.1, and because he's filed jointly, it's $9,500, and we end up having to find the deduction for exemptions. Now it says he has 3 kids plus his husband and wife, so there's 5 of them. So we're going to take that 5 and multiply it by 3,050. That gives me the total of 15,250. Okay, now what I'm going to do is step number 5 says, okay, find the total amount. Taking everything we just learned up here in example 3, now we're going to subtract it. So we figured out in example number 2 that my adjusted taxable income was $53,520. Now I'm subtracting what the standard deduction was, and I'm subtracting what his dependents were. Okay, this now gives me the total of $28,770. Okay, this now is going to be his adjusted income. Okay, guys, that is basically how we work through this problem. You're going to really rely on page 487. 487 helps you with knowing what's taxable income, what are the adjustment items that you can choose from, and then it has that worksheet of how to work your way through. I really suggest keeping that page open and flipping back and forth to help you out. If you got any questions, go ahead, email me or text me. Have a good day.